Good morning. My name's Josh Wilton. I'm a co-owner and the broker of record for Queenston Realty here in town. And the function of today is very simple. We're going to preview, show you what happened in the market. We're going to do some forecasting, though. By the time we're done with the review, you'll be able to kind of predict the forecast. That's the way I always look at it. We do these market presentations multiple times per year. This is my favorite one because I'm willing to bet any guest $1 on my forecasts. Last year, I have to say, I would have collected like $12. So, it would have been a pretty good day for me. So willing to take a dollar bet with anybody, any of the forecasts at the end. And obviously, look forward to helping you. So just for the agenda, we're not here to sell you anything. This is a straight information research presentation on the markets. So we're going to do national, state, and then local forecasts. We're not going to actually cover strategies to buy and sell. We're going to skip that today for time. So we're going to jump sort of into the national picture. So again, I always say that I think, because we're so engrossed in real estate here and what we do, that you'd have to be under a rock not to realize that the housing market has been challenged, not from the perspective of demand, but supply. So the good news is nationally supply is increasing. So this is from a gentleman who, his name is Lance Lambert. He used to be the chief research guy for Realtor.com. Went out, started his own company. It's called Resi Club Analytics. It is a paid subscription. That being said, if you're a data head, he is the man. So inventory has increased nationally year over year, inclusive of New Jersey, and we'll cover New Jersey in a little more detail. You can see the dark green of Florida, California, Southeast California, which I think they call the Inland Empire, something like that. So there are dark green spots where inventory really has increased. Nationally, at 2024, we ended the year sort of in the middle of where we've been. 2021 being obviously COVID, and 2019, 2018, 2017. So we're sort of in the middle of where we were, getting better on a national perspective. However, in New Jersey, and this is tough. This is a tough one to look at. In New Jersey, we are down 61% from pre-pandemic levels. So there are states where inventory is up: Florida, Texas, Nevada, the Northwest, Washington, etc. The Northeast is not one of those segments. And New Jersey, unfortunately, in the nation is down the most from pre-pandemic. It's not that complicated to figure out why. There's not a lot of available land in New Jersey. We are a built-out state, meaning any major development you'll see will be what we call infill development in the more urban areas. So if you look at New Jersey, December 19 to December 2024, we had in December 2024, 12,000 pieces of inventory throughout the state. If you scale that back to 2017, it was 38,975. So that's a very significant drop in standing inventory in New Jersey as a whole. So, and again, if you take a look at our little market segment down here, which we call Trenton Princeton, because again, there's just no way to, from a geographic perspective, disseminate it. We were at 442 in December 2024 against 1,389 in December 2016. So a massive drop in supply and demand was kind of inverted. So, one of the things, and this gentleman by the name of Bill McBride, you can look him up. He's a real estate forecaster. I will say this, he's never been wrong about predicting the market. He does not predict a crash. He just thinks that there will be some transition in the coming years, but no crash. So a lot of people ask, when's the crash coming? It's not, and we're going to kind of go into the detail why. So one of the things I always counsel people, and again, I've been practicing and selling real estate for 23 years, something like that. Real estate is not necessarily, especially in New Jersey, an interest rate sensitive space. It's a job space. If people have jobs and they're confident in their jobs and their income, they're going to buy a home. And, you say rate. I say job. I live with my mom. Maybe I'm married. Maybe I have a new baby. I'm getting out. It's not the rate that's going to prevent me. It will be having income. The other thing, too, is density. When you look at New Jersey as a state versus an Arizona, a Phoenix, California, even the Pacific Northwest, New Jersey, southern, southeast New York, and the coastal areas of this country are very dense, New Jersey being the most dense state in the nation. So density is a big part of it. So looking at jobs from March 2020 to October 2024, New Jersey, you can see, is at 4.8%. It is as good as Florida? No. Is it as good as Texas? No. But for the New England states, the Mid-Atlantic states, it's 4.8%. It's actually the leading state in the market segment. So New Jersey is doing pretty well. Unemployment in August of 2024, because that was the last time I looked, was 4.8. It actually dropped to 4.6% from New Jersey in November. They did not have the end of the year data. Trenton, however, which is our market segment, is at 3.6%. So again, real estate is local. It doesn't matter if the New Jersey unemployment is 10%, but if it's 3.6% in Trenton, that will lead to real estate pressure on the buy side. Ocean City, New Jersey is 8.3%. Vineland, Ventnor, the sort of southeast segment of the state always is struggling for jobs because they are not near a job center such as New York or Philadelphia. So one of my biggest pet peeves, and I share it at every presentation, New Jersey is a net population gain state. If you listen to the radio, if you listen to the news, which you probably shouldn't, it's poisonous, they will tell you New Jersey's declining, people are leaving, et cetera, et cetera, et cetera. I've been doing this for literally this presentation since 2009, pretty consistently. Population in New Jersey has gone up every year. So it is a dense state. It is getting denser. So, it's one of those things where you have to kind of know the math versus listening to opinion talk shows. And then looking at our little market segment down here, Mercer and Middlesex County have become absolute job hubs for a couple of reasons. Number one is transportation. Number two, in Mercer County, you have a large institution called Princeton University. You have Johnson & Johnson, you have Bristol-Myers Squibb. You have a lot of big corporate dense communities here. You also have the state government in Mercer County. Middlesex County, about 10 years ago, 12 years ago, made the decision to position themselves as a tech hub. It has worked. So when you look at the number of jobs gained in those market segments, they've been up consistently every year since 2008. I saw a stat on it yesterday. I couldn't grab the slide. But Mercer and Middlesex County, inclusive of Somerset County, are job growth parts of the state. Not everywhere in the state is job growth, but that's more the southern, eastern parts of the state. So local markets. So, and again, if I'm going fast, I was born and raised in New Jersey. So if I'm out of the state, too bad for you. You got to keep up. All right. So looking at this was a presentation. This is a slide I did from the presentation of 2018. And I said, when you look at Mercer, Middlesex, and Somerset County, and I called Central West, central part of the state west, because the central part of the state runs from the river to the sea, right? Perth Amboy technically is central New Jersey. It's just on the other side of the state. In 2018, I said the top three drivers for our market segment were train, schools, and affordability, right? Those were and schools, by the way, school reports, right? School rankings. The number two driver, schools, trains, and affordability. The number three one, because it was sort of being developed and it's continuing to develop, is what I will call convenience, town center, and lifestyle. We'll talk about the baby boomer segment of the market. Affordability was a big one, and schools and trains, right? Those are like, depending what you talk to in the market, that's what people were saying. Now, I will tell you the number one driver is schools and jobs in our market segment. People want to be close to work, or conversely, they want to be on a train hub to New York as you're continuing to see companies call people back into the office. So convenience, town center, lifestyle, that applies to Robbinsville, that will apply to West Windsor, that will apply to Montgomery. People want to be close to convenience. They don't want to be driving 2 hours everywhere. Access to jobs obviously was, in 2021, people thought no one would ever go back into the city. Now people are being called back to work. We'll talk about some predictions in the market for there. Schools is massively important. And affordability, I use the word sort of because affordability is a relative word, right? We're still more affordable than Bergen County. We're going to go through a lot of pricing in a minute, but it's comparatively affordable to New York, Bergen, Morris County. It's just not that affordable as it used to be. So we're going to kind of take each market town by town. And I will say this, if we don't cover your town today, I probably have the research. And if I don't, we will get it for you probably within a week, week and a half. So the reality is the trends for each town are, I don't want to say they're all the same because there's some level of subjectiveness to it. But if we miss your town today, we're going to cover the county, we're going to cover the state, and then we're going to cover forecasting for the market segment. So taking a look at West Windsor, right? And West Windsor is an interesting town. In 2019, 493 homes were listed in West Windsor. Fast forward to last year, 264, which is a significant drop. However, the good news in West Windsor is that there was a pickup in inventory from 2023 to 2024. As a matter of fact, it was one of the few towns where you saw a pickup in inventory. That being said, if you want to buy in West Windsor, I would recommend bringing a bazooka to the gunfight. It is very fierce. It's high level demand. Why? Well, think about it. It has a train, Midtown Direct. It has a train to Philly. It has a train to DC. It has two of the top high schools in the state, North and South. So, it has a newer housing stock. So when you look at the value of homes sold, pretty consistent. But when you look at the number of single family homes sold last year was 154. It was the lowest point in West Windsor. Really the markets, it was the lowest transaction year since 2010, pretty much across the board. Nationally, it was the lowest transaction year in recorded history for the modern stats. So West Windsor last year was 25% cash. That number will come down. We'll talk about it. Standing about 2 months absorption. So what does that mean? West Windsor is still an appreciating market. Home prices are still going up in West Windsor. They will continue to go up in West Windsor. So let's take a look at what happened last year. The single family home price in West Windsor for the first time in its history has broken $1 million, right? Which is incredible. If you all bought a house or two of them, you could have done a 2-for-1 special in 2012 in West Windsor. You could have bought for $563 last year. One house cost you $1 million. So the pressure on the single family home market in West Windsor was extraordinary. A lot of people were locked into low rates. As a matter of fact, I did a search this morning in 08540 zip code. Over 3,962 people have lived in their house or owned the real estate for more than 20 years. It's a massive number of people hanging onto real estate. So I don't see that particularly changing in West Windsor. This is the deal. Again, if you're wondering why there was bidding wars, it used to take, 60 days to sell a house in West Windsor. Last year, if you blinked your eyes, it was gone. And you had to wait for the next one, if the next one actually came on, even though the fourth quarter was a little bit better. This is the big picture. This is a single family unit sold. So you can see from 2012, it was the lowest transaction year on record in West Windsor. It did improve from 138 to 154, one of the few bright spots in the county in terms of increased volume. And again, what do you have to do to be a successful buyer? You have to bid at least 105% of the asking price, sometimes more in West Windsor, depending on the house, the location, style, condition, et cetera. So the condo townhouse market in West Windsor jumped from 558 to 785. It's a little bit of a skewed number because they did bring on new construction condos last year in West Windsor, which sold in excess of 800,000. So that did skew the price upward. You'll see that normalize over the next couple of years. But again, days on market increased. Again, there was new construction in the market. So a little bit of a skewed number. List to sell price ratio, despite the new construction, despite the high price, 103.4% of asking. But again, and I apologize because my screen is blocking this. And of course, the number's cut off. We closed the year in West Windsor in the 80s for condos and townhouses because that's what happens when you bring new supply into the market. So being for housing development against housing development, everybody in this room, if you live in a home, that house was built by a builder. So get over it. It's going to happen, and the market will find itself. Long term, it's good for the market to have more supply, especially as our market starts to age. The 55 plus days on market in West Windsor was ballistic. They sold 100% of asking price. this was a big problem. So when you look at the real estate market, if you're a condo buyer and you can't buy, right, because the 𝐂𝐎𝐍𝐄𝐓 split seller is locked into a 2 to 3% interest rate, everybody's locked in place. Everybody, from the first-time home buyer, they can't move out of mom's basement because of the fact that there's no supply, right? And then rates spiked, making it less affordable. And that locks everybody in place. So when you look at the 55 home plus market, which is on the opposite end of the first-time home buyer, they are also locked in place. So the whole market is frozen. Canal Point, for those of you who know Canal Point, condos and townhouses, the average price came down a little bit subjective, and I'll show you why. Only 2 houses sold. So, it's a little subjective, but you can see I show you this slide because this is what the consumers were facing last year. That being said, overall, the condos and townhouses in that price segment went up. There's just not a lot of single family houses in there. A little bit of good news that days on market went from 6 to 15. Again, it's subjective, but home inventory in West Windsor is picking up. You can see in 2023, things were selling at 110% of asking price, basically, if you round it up. Came down a little bit as price sensitivity started to enter the market in the Canal Point. And if you don't know where Canal Point is, it's the Princeton side of Route 1, which is closest to campus. And I'm telling you, this is what happens. Parents will buy their kids who go to Princeton a unit for 2 years. They cycle or electric bike up the hill to campus, to the graduate campus. And then they hold on to it as a rental after the kids leave. So anything close to these downtown areas is in high demand. So Colonnade Point, which is a different community. This is a condo townhouse. You can see the problem for the first-time home buyer being locked out of the market in 2012. An entry-level market was $234,000. Today, it's $415,000. And it's $700 per 100,000 borrowed versus when a rate's at 4%, it's $400 per 100,000 borrowed. That adds $1,200, $1,500 to the monthly payment of that particular community. Plus, you have to have a higher down payment. So it's really frozen out the first-time home buyer. So that's actually become an investor-centric market. We'll skip that. But again, pay to play. You want to bid, you have to bid over asking price in that market. And again, very few units sold last year. It went up 6 to 7. So Plainsboro, again, A+, shares a high school with West Windsor, or West Windsor shares a high school with Plainsboro. I'm not getting into that debate. But, and by the way, West Windsor North and South, you could put 10 parents in a room, 5 from North, 5 from South. Only 5 are coming out on the debate, which high school is better. They're both excellent. So, people are very passionate about that stuff. But Plainsboro is a relatively small market, especially for single-family homes. 300 homes were listed in 2019. Fast forward to 2024, 191. So you can see the drop. Again, a bit of bright news in the market. It almost broke last year. We were down 3. Closed transactions was down a little bit. But again, the number of single-family homes sold went from 93 to 61 in Plainsboro. So again, tremendous pressure in Plainsboro. That being said, something to watch, the majority of the Plainsboro market are condos and townhouses. It's the majority of the home density in that market, the single-family home market. Unlike Princeton, where it's majority single-family homes, the majority of Plainsboro is condo townhouses. So if you ask me what to predict in that market, as the market frees up, you'll see that condo townhouse inventory pick up first, and then later in the year, it will affect the single-family home market in Plainsboro. So it should come in higher than last year. But again, the single-family home price in Plainsboro was a relatively sleepy town for single-family home prices, and then they built a town center. Right? They have a main street and they have a place to shop and eat and go, et cetera. So they went up about $300,000 in 4 years. Plainsboro, days on market dramatically fell by 2/3 last year to 2020. And the number of single family homes sold went down about 30% since 2020, 2020, 2021. So, when you look at the Plainsboro single family home market, there's not a lot of them. It's on a train line, and it's got excellent schools. So you're going to continue to see pressure. This is a little bit of a point of concern when you're looking at the market. What was affordable in Plainsboro, 412, is now 652. Right. So I think you're going to see some price sensitivity coming into the market in the Plainsboro condo market in 2025. Days on market fast. And again, the homes sold in Plainsboro, it was at an all-time low for the number of condos sold last year versus the last 12 years. So we'll skip that. So Pennington, and I'm going to show you Pennington because Pennington's a unique market in that it's about the size of my thumbnail. It's not very big. There's not a lot for sale. So it's like a micro market. It's unlike Princeton where they merged the township and the borough. Pennington is still an independent town. What's interesting about Pennington is that, this units listed has dropped. However, it had one of the largest increases in the market percentage-wise from 43 to 52. What you can see and what we'll talk about later is in the outlying market. So if you look at Princeton as the center of the market in Mercer County, which it is because we're closest to South Brunswick, Monmouth, Somerset, and Mercer, we're kind of in the center of all those counties. The outlying markets will start to see inventory pick up before Princeton. Princeton will be the last to see inventory start to gather. So closed transactions in Pennington was down pretty significantly. The single family home market actually came back last year. There was 10 more, 11 more last year than the year before, which is a good sign for the market to start to thaw. So again, if you're a buyer and you're looking and you can't find something in Princeton, you may want to start looking in the outer markets only from the perspective of supply, not necessarily affordability, because the average single family home price in Pennington went from 580 to 822 in 4 years. That being said, you can predict a slowdown in appreciation in Pennington over the next several years. We'll talk about the picks for appreciation. That's where I bet you $1. And again, days on market picked up a little bit, which is good. If you're looking at the buy side as a seller, you have to price your house right. You have to bring on according to the market. And again, the number of homes sold in Pennington was a bright spot. It did pick up. It's not that they're not selling quickly. They are. It's just that a little more have started to sell, which is great. And you can see as things start to come back to the market, the listed sale price ratio will normalize. It'll go back to 96, 98, 99% of asking price versus 110. So when you're looking for those price shifts, you can watch that. Not a lot of condos in townhouses in Pennington. That being said, the pricing did go up. I don't particularly see a softening in this based on these numbers. So days on market, homes sold up a little bit, but not statistically significant. It's still down by almost half from the peak in 2021. 2021 was a big market, came out of COVID, et cetera. So Hopewell Township, overall, the school grade is an A. I can tell you, having 3 kids through Princeton High School, they are very good in sports and they're brutal to compete with. So good high school from that perspective. So that being said, 454 homes were listed in Hopewell in 2019. And you can see the low point in Hopewell Township was 286. So again, if you think of Princeton as the donut hole and the other towns, so from Franklin to Hopewell, southward Cranberry, even Burlington County, northern Burlington County, Hopewell went from 302 to 393 last year for homes sold. Now, that's not all the resale market. A fair amount of new construction came on in Hopewell. There was a new townhouse community that is basically sold out on the market. But that being said, more supply came, which gave people the opportunity to move, which is a good thing for the market. So closed transactions, even though more supply came on in 2024, more of it sold at 285 versus 245 the previous year. And obviously a pretty big pick in the market. That being said, the single family home market is the struggling segment of the market in Hopewell Township. And Hopewell Township is a massive market. So there's Brandon Farms. There's a lot of townhouse communities. There will be continued pressure on the single family home market in Hopewell, whereas I think you'll start to see inventory unlock in the condo and townhouse market as people age out and want to move to bigger spaces or downsize. So again, the average single family home price in Hopewell went up by about a third last year to 824 from 582 4 years ago. Single family, tremendous amount of pressure just because there's not a lot of them. And again, overall homes sold dropped precipitously. The townhouse market in Hopewell did not go up as significantly, only because they brought more supply on. And when you bring supply onto a market, and we'll talk about the Princeton rental market in a minute, home prices will soften, rental prices will soften. So again, days on market for homes in Princeton and Hopewell under $1 million, 29. Why? There's not a lot of them. Under $1 million, the number of homes sold went down, and that's because what used to be 800,000 in Hopewell is now 1.2 million. What used to be 900 is 1.2 million in Hopewell. So the number of affordable homes is dropping across the price point. And again, when you look at the $1 million to $1 million plus single family home price, you could say home prices came down on average in this price segment, when the reality is what used to cost you as a buyer 900 is now 1.2 million. So it's not that they came down, it's that the number of affordable homes in Hopewell, as you can see from this slide, is shrinking. So in 2020, 12 homes sold in Hopewell above $1 million. Fast forward to last year, 45. That's the appreciation that you're seeing in every market across the board. So again, even though home prices went up in this price segment, buyers still had to pay 102.6% of the asking price. So there's just less affordable homes. And unfortunately, in a state like New Jersey, where we are built out and it's difficult to build and it's expensive to build, and there's legal reasons people don't want to build condos, that it's going to be tough to bring new inventory online. So there's going to be continued pressure in that segment. But again, the condo townhouse average sale price went up a little bit, not as dramatically as other towns, only because they brought some supply on it. That being said, ballistically fast. And the condo townhouse market in Hopewell is different in that they're designed around town centers in and of themselves. They're close to shopping, the schools. They have their own schools. Some of them are so big. So it's a great market from that perspective. So you can see last year, that was a bright point in the market. More condos sold in Hopewell than single families. That will continue in 2025. Skip that. So Hopewell Borough, I'm not going to do the grid. I'm just going to show you. Hopewell Borough was like a sleepy little town, and it's become a very vibrant downtown. It's got its own restaurant scene. They're just about to finish the little inn, which is now not a little inn. It's a pretty significant inn. It's got its own little library system. So you can see people are looking to move into the borough. Days on market dropped pretty significantly to 19. Issue is inventory has declined. We'll talk about that. Listed sale price ratio is at 105%. It's at an all-time high in Hopewell Borough. I don't see that changing that dramatically. And again, the condo townhouse market is statistically insignificant in Hopewell Borough, though you are seeing price gains in that market. But again, one could sell at 100,000 and totally drop the price. And it's not that the sky is falling. It's just a different unit came on the market. And you can see it was actually 11, not 1 for the record. I'm sorry, it was 9, not 1. We screwed that up when we put the date in. So we were down a little bit in days on market. But again, there's not a lot for sale in the borough. Robbinsville, I wanted to talk about today because it's one of the most dynamic markets in the county. If anybody's lived in this market segment for any length of time, Robbinsville has gone through an amazing transition, which West Windsor's going through, which Plainsboro went through, Montgomery Township is about to go through as they build the downtown in Montgomery. So Robbinsville, units listed 327 to 225, 2019 to today. Closed transactions at an all-time low. Single family homes sold up a little bit, 83 to 109, which is a bright spot in the market. The issue in Robbinsville is this, and I would say this is a point of concern, right? How sustainable is this? I don't know. I'll be honest. I don't see a huge price decline in Robbinsville. However, I don't see continued appreciation in Robbinsville across the board in the single family home segment. So the reason that Robbinsville, was so robust was they built a town center, they built development, they built a brand new high school, which is beautiful, right? And then pretty immediately the high school did get filled up, which happens as people follow good school districts. So Is this sustainable long term? Hard to say. I can tell you that it's still very difficult to buy a home in Robbinsville. Days on market increased a little bit, but you can see in 2012, before Robbinsville became the Robbinsville of today, it was a sleepy little hamlet. And then they built a town center. A lot of restaurants moved in. The school got redone. The grade went from probably a B- to an A. And all of a sudden, it became its own ecosystem, its own destination, where not only, I would say, people that want to be in the school want to live, but baby boomers want to live because they can live in a townhouse and walk to a restaurant and still be at the Hamilton train station in about 6 minutes by car. So Robbinsville has its own ecosystem. Again, the list to sell price ratio has come down a little bit, but again, in those years where it's come down, the prices have still gone up. So we'll see what happens this coming year in terms of pricing in Robbinsville. Units sold, a little bit of a bright spot for single families. It went from 80 to 109, which is good. Long way to go to get to any sense of normal in that market. And again, the condo townhouse sold price 241 to 708. So crazy. Crazy. Is this sustainable? I don't know. We'll see. It is expensive, but there's just dwindling supply across the board. You do see the increase in days on market from 12 to 31. Is it statistically significant? If it continues, and that's why we do these presentations quarterly, because we track and present it quarterly. And you can see the list to sell price ratio on condos and townhouses has come down. That being said, the prices are still heading in the upward direction in that price segment. So we'll see what happens in 2024. This was a bright spot in the market. There were more townhouse and sold units in Robbinsville than last year. So I think what you'll see is the unfreezing of the Central West market will begin in the condo townhouse market, right? Investors will sell, they'll cash out on their equity. People that want to upsize, downsize will retire. Life has a way of happening, right? Birth, death, divorce, marriage, all those things. So Cranberry, interesting town. It's like it hasn't changed that much since it was built, but it's got a lot cooler restaurants than it used to. So A+ school, Cranberry. What's interesting is Cranberry is such a small town. It's only gone from 48 to 33 homes sold. The interesting part about Cranberry, because it's such a small town, and I think it's one of those towns where everybody knows everybody. There's a huge off-market brokerage business in Cranberry, meaning a broker gets buyer A, the broker knows seller B, and they move people around in Cranberry like chess pieces. And I'm not saying it in a negative space. I'm saying the market's been so constricted and in such high demand that people are approaching brokers and say, hey, do you have anything? And they say yes, and they move them there, and they literally are doing off-market transactions, which I think statistically would add about another 15 to 20 closings to the 33 that you're seeing in 2024. That's how big the off-market segment is. I'm just going to have a sip of coffee. And again, closed transactions, 32. And so Cranberry is one of those towns where inventory didn't pick up. It will pick up in 2025. The number of single-family homes sold went from 20 to 19. Now, in Cranberry, there is a pretty big 55-plus community. So for the single-family homes on these grids, I took the 55-plus out because single-family theoretically would be for not a first-time home buyer, a new buyer, a buyer that's 65 years old. Anybody could buy that. 55-plus obviously is age-restricted. It's not as open of a market to the entire buying population. So the line you're looking at for single-family homes sold excludes 55-plus. That being said, the average sale price in Cranberry hasn't gone up that dramatically overall, right? Single-family homes. And again, I can tell you, Cranberry was a sleepy town, and it used to take a little bit of time to sell a house in Cranberry, 188 days on average, 210. And you can see, and by the way, that 183, that was a house that had been on the market about 14 years. And finally, the market caught up to it, just so you know. So it kind of screwed, busted the bell curve, but down to 54, 58. And why so high compared to other towns? Cranberry has a lot of older housing stock on the main street and what I would call access roads in and out of Cranberry. So older homes take longer to sell than newer homes. They don't have a larger buyer pool. So traditionally, Cranberry took a little bit of time to sell. And again, the number of closed homes, single family last year, 27, which is pretty low. It was this, this third lowest year on record there. Yeah, 27 single family homes in Cranberry last year. I know, geez, that's somebody here just on Zoom. Somebody goes, geez, I agree with you. Geez. That being said, because the 55 plus market is locked in place, meaning this, they can't move anywhere. There's no place to go. They couldn't go to a condo because there hasn't been any. They can't upsize or downsize because there just hasn't been inventory. Home prices in that segment spiked because of the fact that there just hasn't been that many that have sold. So you can see from 2020 to 2023, like not many sold. Last year was a little bit better. You'll continue to see a thaw. But that being said, because we've been in this locked up mode since 2021, 2020, really, you're going to see people, you're going to see inventory absorbed, even though it comes on the market at a greater pace in 2025. So again, the under 1 million home price in Cranberry went from 600 to about 850, and days on market for that, because again, that's the most affordable segment of the market for single family homes under $1 million. But again, the number that closed was 15 houses under $1 million in Cranberry. The peak was 2016 at 43. Why? Just because more houses are selling above $1 million across the board in a market segment, period. So I wanted to show you this. The number of $1 million plus closed homes in Cranberry, it was an anomaly in 2014. It didn't happen that often. And if one sold, everyone's like, ooh, big one sold. Now it's like, all right, what's for breakfast? It just the market has transitioned. I don't see that particularly changing because of the fact that Cranberry's built out. They're not bringing a new inventory online. So, the pricing in Cranberry is going to stay pretty stable. Lawrence Township is an interesting story from the perspective of probably 10 years ago, if you looked at the school grade. And again, this is from a site called 𝐂𝐎𝐍𝐄𝐂𝐓. It has nothing to do with us, just so you know. They're now an A-, right? And my son's a senior, plays football, and I was at the captain's dinner for the football kids, all the Mercer County kids and whatever group they're in. And, the starting nose tackle for the Lawrence High School football team just got a full ride to Stanford. So, I don't know any kids at Princeton High School who got a full ride to Stanford. So the school has improved dramatically from a rankings perspective. That being said, Lawrenceville is one of the biggest municipalities in Mercer County other than Hamilton, right? It's a big municipality. And in 2019, 557 homes, condos, the whole shebang were listed. You dropped out to 330 last year. That is significant. 330 is up a little bit on 2023. But again, 230 to 164. So if you ask me what's going to happen in Lawrenceville, you will see more inventory start to come on the market as things thaw, people can make moves. Plus, people in Lawrenceville are sitting on record equity. So home prices have moved over 200,000 in 4 years. It's the highest price average single family home price on record, at least as far as back as I can track it. And they're selling quickly. So I think you're going to see people cash out of Lawrenceville, make that move to the 55 plus, whether it's Cranberry at the shore, Florida, et cetera, which we'll talk about. But again, this a little bit of a bright spot. Lawrenceville went from 146 to 165 in terms of single family homes sold. That trend will continue to get better. Again, we have a few years to get back to normal being about 240 to 250 a year in Lawrenceville. We are nowhere close to that, though we will finish up pretty significantly over last year. You'll see the list to sale price ratio drop a little bit for single family homes in Lawrenceville, not prices, just it won't be 105% to get a house. It'll be 101, 100 at the end of the year. But again, the condo townhouse market in Lawrenceville, and I apologize, I don't know why my slides are getting cut off in terms of price. It's about 456 average. Again, it's not quite doubled. But again, if you're a first-time home buyer, where are you buying? If you're a young family, where are you buying? You're not buying necessarily 650 because you haven't had any equity gain in real estate. And most people, despite the stock market, most people's equity gain in life is through real estate. So There will be continued pressure on the condo townhouse market in Lawrenceville. There'll be continued pressure on that throughout the county, especially the more affordable ones. Days on market, very low. But again, the condo townhouse market, 137. So, not a lot transacted last year. That will get better. I think some investors will take their equity and move on. I think people will move on. As the single family home market opens up, it'll give people a chance to cash out of their condos and townhouses, move on to 55 plus, move on to a single family, et cetera, et cetera. Hillsboro, A. And again, if you said about 8-9 years ago, Hillsboro was probably a B on this report. And I know that because I used to do this presentation 8-9 years ago. They've improved the school districts dramatically. And again, these are as far as test scores go. So in Hillsboro, used to be an affordable town. It's still affordable compared to Bergen County. If you picked a house up in Hillsboro and drove it to Bergen County and dropped it in the middle of Bergen County, it would probably, instead of costing you $894, probably cost you $1.4 million, and the taxes would be double. So when I say Central West is comparatively affordable, it's comparatively affordable, right? So Hillsboro, the average price went from $534 to $894. Is that sustainable? I think you're going to see a little bit of softening. I don't think you're going to see continued appreciation in 2025 in that market, but I don't see any particular drop in home prices in that market. I just don't think you're going to see the continued appreciation. That being said, the condo townhouse market, again, in Hillsboro has doubled. And again, Hillsboro is a very big condo and townhouse market. More supply has come on in Hillsboro. I don't have the slide for some reason. I couldn't get to it this morning. We'll track that. And again, all the data here, just so you know, whichever associate at the firm invited you, they have access to this. We update it monthly and quarterly. So just say, hey, send me the stuff, or just communicate with them. We'll send it out to you on a pretty consistent basis. This is what's interesting about the condo townhouse market in Hillsboro. The school district gets better, right? It's affordable compared to Princeton, compared to Montgomery, compared to Basking Ridge, compared to towns with a train line on it. So despite the fact that the condo townhouse market prices have doubled, they're selling faster than they ever have, right? So interesting, it'll be one to watch. And again, the condo townhouse market, they were selling at 105.8% of their asking price. Why? Because they're comparatively inexpensive. Comparatively, I use that word a lot because sometimes, people think I'm goofing on them. So Montgomery Township, also an A, right? Oh, there's my slide. I got screwed up. So again, single family home price in Montgomery for the first time broke $1 million. One of the things to watch in Montgomery Township is its size. So it is a massive market. Days on market dropped precipitously. Something to watch in Montgomery Township. The number of cash deals in Montgomery Township went from 28 to 16%. So there's less cash being used to transact real estate in Montgomery, which means Montgomery is going to become a more rate sensitive environment. We'll talk about that in a minute. That's across the board. But again, you still had to pay almost 105% of the asking price to compete in Montgomery in the single family home market. And this is why it was at an all-time low for homes sold last year. So 113 versus 299 in 2016. So it's down dramatically. I will say this, in every one of our markets, the worst is over. You will see more supply side you'll see the supply side getting better. You still have 3 to 4 years before the market becomes anything resembling normalized. So if you're a buyer, you're going to continue to be in a competitive bid situation for the most part. If you're a seller, you'll have to be a little bit more price sensitive, but it's still obviously a very good time from an equity position to sell. Interesting. I think this community is still dynamite. Montgomery Woods. Montgomery Woods is what I call the Blue Spring corridor. So if you drive up and down Blue Spring Road, on the left are townhouses, on the right are townhouses. And, you used to be able to buy them as a first-time home buyer and have, pretty nice space up and down, usually not a basement, but some had basements for $304,000. Fast forward to today to $545,000. In about 2016, let's say 2015, they passed a rule in that community that you couldn't buy it and rent it. You had to buy it and live in it for a year or two before you can rent it. It didn't stop the market. the market kept right on going. So even though they took the investors out, the market kept right on going because it's the most affordable price segment in the town, period. It's got parking. It's close to Princeton. It's now close to the downtown Montgomery. So it's got a lot to offer. Plus, it's a newer housing stock. So when you look at the list sale price ratio, last year it was 107. 2023 was 107%. Got a little bit better last year, but again, prices continue to go up. Days on market, don't blink, you'll miss it. But again, units sold, really tough because people are hanging on to them. As they move out of them, they are you becoming investors because there's a lot of tax advantages to it. So Princeton A+. And again, I'm just going to say this. My oldest son did college first semester, graduated Princeton High School. It wasn't for him, works full time. My daughter's at San Diego State, biology major, loves it. She's on the sailing team. We sure have such a rough life. My youngest is going to Brown. The whole school report, I'm showing to you this because people buy into the psychology of the school report. At the end of the day, as a parent with 3 kids, it's you and your kids, just so you know. So Princeton, units listed. I said report that Princeton 2024 was the year that wasn't in the Mercer County Central West market just because of the lack of inventory. That being said, it was a little better, which is good. You'll continue to see the thaw in 2025. But again, we were down 449 to 306, and we have a long way to go before anything becomes normalized in this market. Closed transactions, even though there was less inventory, we were selling a lot of it. And again, the value of the home sold went from 298 million to 343 million. Massive price improvement increase in Princeton. It's about 40%. But compare that to Robbinsville, where the appreciation was over 100%. It was about 120% in 5 years in Robbinsville. So, we'll have to look at it. And again, the number of single-family homes sold in Princeton was down at a record low of 173. So one of the things to look at in Princeton is pricing. So again, in 2012, a single-family home was $1 million. Today, it's 1.7. Okay. Now, keep in mind, in 2023, 50.1% of the market was cash. It came down to 40% in 2024. I think that will continue to decline a little bit and get back to a normal for Princeton, which is about 25 to 30%. West Windsor went from 31% cash to about 23% cash in 2023 to 24. So the percentage of cash is going to overall decline. If you're a cash buyer, you're not king. You're somewhat average in our markets, just so you know. You still have to make a competitive bid. So Princeton single family home price, you had to bid 104.7% last year to buy a house in Princeton single family. Days on market, 12-year low, pretty tough. Units sold, 12-year low, which is why the days on market, everything was brutal last year in Princeton. So the under $1 million, I'm going to kind of use Princeton as a beta for every market, by the way, just because the prices are so extreme. So in 2012, right, the average single family home in the under $1 million market was $658. Today it's $855. And you would say, well, that's not statistically significant. Okay. It's only 200,000, which again is an insane word. Here's the issue. In 2012, 130 homes in Princeton, single family, sold under $1 million. Last year, there was 19. That's across the board. So I'm using this as an example for Hopewell, for Lawrenceville, for Robbinsville, for Cranberry, for every market, Hillsborough, it doesn't matter. Home prices have appreciated 30 to 40% in the last 5 years. So in Princeton, what used to cost $900 is probably 1.5. So the available inventory under $1 million is basically non-existent in Princeton for the single family home market. So again, the listed sale price ratio 105.9%. The average sold price for $1 million to $1.9 million went from $1,354,000 to $1,457,000. So you say, well, there's not a lot of appreciation in that market. Well, again, in 2012, right, there wasn't that many homes. So the days on market was 29. This is the slide that's interesting. So again, in 2012, there was only 55 homes that sold $1 million to $1.2 million. In Princeton, last year was 86. And the only reason it was that low is because we were inventory constrained, right? You'll probably see that go up to about 115 this year as inventory continues to improve. So again, the listed sale price ratio for that price segment, 105%. This has become the new normal price range in Princeton, meaning if you're going to buy, this is where the single family houses are priced on a starting basis. Again, because what used to cost 400 is now 900. What used to cost 800 is now $1.3 million. What used to cost 999 is $1.5 million. It's just, and that's in every one of our markets at every price point, because Princeton's so dynamic in terms of the pricing. You can see it now in the 2 million plus market. You could say prices have come down. They actually haven't. It's just that homes sold there have come down. Days on market, fine. This is the big picture. Of course, the number gets cut off. In 2012, 11 homes in Princeton sold above 2 million. Last year, we broke 55. We haven't built any new homes. Well, I shouldn't say that. There's been some knockdown and rebuilds, but it's not statistically significant. So what you're seeing is that 1.5 million house is now 2.1. The 1.4 million house is now 199,999, and because there's nothing for sale, it gets bid up to $1 million or $2 million. So it's just sort of what's happening in the market as a whole. And the home sale prices in this market above 2 million, 100% of asking price. This is a little upsetting, I will tell you, from the perspective of where's the market go next. The average condo townhouse price in Princeton went from 516 to 1.1 million. Now, somewhat skewed in that finally in Palmer Square, some of those massive townhouses sold that had been for sale for 17 years. A couple of them sold, so it does skew it. That being said, the average price has gone from 500 to 875, 900. It's still a big pick. Days on market has picked up a little bit. Homes sold picked up a little bit, which is good. So again, you will see the thaw in our market, in the condo townhouse market, and it will work its way up to the rest of the market. Again, Washington Oaks, just for those of you who track it, it's a condo townhouse community. It went from 439 to 987, which is somewhat insane, but it is what it is. It's newer build, somewhat close to town. It's in whatever. Days on market, 16. And again, but the units sold is the big picture there. There just wasn't a lot of them. So if something came on, it was a bidding war, high sense of urgency. People needed a home, et cetera, et cetera. So again, Griggs Farm, which is probably the cheapest townhouse community in Princeton, it's on the north side of 206 and went from 319. It actually dropped from 319 to 268. We should have all jumped in 2014. I didn't. And now it's 551. It came down a little bit from last year, but again, it's not so much that the price came down. It didn't. The number of units sold went up, and there's a few different models in there. A few of the cheaper models sold last year versus the year before, so it skewed the pricing. So again, it's a very, very robust community. Governor's Lane, and I'm showing you this because I want to give you a semblance of the market. This is Hillsborough. This is every market in our district. Governor's Lane used to be a retirement community. You sold your single family home in Princeton, and I'm making this up, at $1.3 million. You downsized into Governor's Lane, right? At 719. So you had $400,000 or $500,000 in equity, you put it into the bank, you're earning interest. Now, right, it's $1,224,224. So one of the issues in Princeton, in the upper end in West Windsor, in Hopewell, in all of these markets is, where do I go? Princeton doesn't have any 55 plus. People want to stay in town. They're not building resale, they're building rentals. So there is this level of people, the baby boomers are stuck. They either have no mortgage, or if they still have a mortgage, it's now 2.5%, 3%, which has continued to lock up the market, right? It's continued to lock up the market. So again, days on market 10, because Governor's Lane used to be a place I can say, and hopefully it's not illegal, but it was sort of like a retirement community. It just is what it is. Now, it's the inverted. People go there to get into Princeton, to start their journey in home ownership in Princeton. So again, it's starting to get better. So that's sort of the breakdown of the markets. If I didn't cover your market, I have it. Your associate can send it to you, or they can schedule time and we can chat about it, whatever's easier. So let's do forecasts. Everybody take out your dollar bills. This is where we bet. And there's a lot of people on this meeting today, so I could be out a little bit of money, but interest rates, This is the forecast for rates from Redfin, which is a real estate company, to the National Association, which is a trade association, and Bright MLS, which is our local MLS, Morgan Stanley, PNC. So Redfin has it at 6.8. The National Association of Realtors, maybe a little optimistically, has it at 5.8. If you want my bet, it's going to end the year about 6.33. You will not get to that price segment in rates until the third quarter. We'll talk about the variables of it. And I'll say this, if you bet me against this last year, you owe me $1 because I was right with my pick last year. I don't see, there's a lot of inflationary pressure, which we'll talk about in a minute. So that's probably where rates would come in. And again, if you took the middle of all that and blended it, 6.33, but I happen to agree with that. Inventory, this is Zillow's forecast for home prices for 2024 to 2025. We are here, right? Well, let me just show you this. We're here in this price segment. So here, Zillow's predicting continued appreciation for our market. I think they're correct. We'll talk about where that will happen and what price segments. But overall, you're going to continue to see appreciation in our markets. In northern New Jersey, you may see a little bit of softening for inventory, but we'll see how that goes. Moody's is actually pretty negative. They think national home prices are going to drop by 0.4%. This is our little slice of the world here. That sort of correlates there on the chart. So even Moody's for our geographic segment is predicting a little bit of appreciation, 1% versus Zillow, which is higher. So when you look at 2025 and you want a summary of what's going to happen, inventory will go up, right? It will go up faster in Southern Maryland in the Mid-Atlantic than New Jersey. Southern Maryland, you'll see 20% increase in inventory. At the shore area where insurance continues to be a problem, we'll talk about in a second, you'll see more inventory as people realize they can't afford to keep their shore houses anymore because of the insurance prices. So you will see inventory up across the board. The Mid-Atlantic, which we're in, you'll see 12% net inventory. A lot of that gain will be concentrated in the rural areas of the Mid-Atlantic, Southern Maryland, Western Maryland, et cetera. Or transaction volumes, you'll see 12%. New Jersey, you'll see 6 to 10% increase in transaction volume. If you want my opinion for our market, we'll be the lag behind that. 4 to 8% increase in transaction volume, which means you'll see a little bit of increase in inventory. Probably inventory will go up about 5%. Appreciation, Mid-Atlantic, 2 to 4, New Jersey, 3 to 5. I think in the lower price points in our market segment, you're going to continue to see appreciation. There is just way too much pent-up demand. We're at a historic low for inventory and supply. So most of the appreciation you will see will be in downtown areas, close to transportation. The cheapest housing product you can get will go up the most because more people can afford it. I will say that we haven't had this in the last 5 years or so, right? You will see what we call price sensitivity. So the percentage of cash buyers will go down, and it's not for any other reason we're just seeing a decline. I don't want to get into tons of reasons, but that means a greater percentage of the buyer pool is now rate sensitive. So what does that mean? If a seller's house is worth 1.5 million and they're going to test the market at 1.7, they're not selling it. That's what that means. It means you have to be priced correct because the buyer's budget stops at 1.5. That's it. Because above that, they can't afford the payment. So price sensitivity is going to be important. Areas for concern for 2025 insurance costs. I would advise everybody in this room or on this call, if you haven't looked at your insurance statement, look at it and shop it because your insurance costs have gone up. Again, I'm willing to bet anybody in the room at least 20% from last year. You don't even know it because they don't tell you. They just increase your payment. So insurance costs are going to be an issue. They're going to be an issue in the coastal part of the states. They're going to be an issue on the rivers. They're going to be an issue anywhere there's wetlands, anywhere where the FEMA maps and the insurance maps say there's a potential for water. You're going to see skyrocketing insurance. What just happened in California and is continuing to happen, every time Florida has a hurricane hit their market, your insurance costs are going to go up. The other thing too, in New Jersey, legislation just passed whereby what happened in Florida when that building collapsed and unfortunately, people were hurt and killed. New Jersey just passed the law. The first part of the law is this: if I buy a condo, not only am I going to inspect my condo, but I have to do a structural inspection of the condo building. Does that make sense? So you're going to see an increase in insurance in the condo market, right? In New Jersey. Why? Because they don't have enough in reserves. They have to pass a special assessment to collect money for the reserves, which will force people out because they don't want to have an increase. Maybe they went in there on a fixed income. So you'll see insurance costs go up in that market, which I think will dislodge inventory in the condo townhouse market. And again, this is not a political thing, but you have to keep your eye on the tariff war. Tariffs are inflationary, and inflationary happens, that rate will not come down to 6.33. So maybe Redfin thinks that's going to happen and they're stuck at 6.9. Another thing that has a huge inflationary pressure that people don't talk about day to day is the national debt. Has to be dealt with at some point. Who's going to deal with it? I don't know. Not for today's debate. But that being said, the fact that it's gone up so precipitously, and if you look at the current president's first administration, it went up pretty precipitously in their first administration, which if that happens again, will have inflationary pressure, which will keep rates a little bit high. If rates stay above 6.5, the freeze effect in our market will stay in place, other than life events, death, divorce, marriage. But even marriage, a question of where do you go? So, rates have to come, in my opinion, below 6.5 for things to unlock. I think it's 6.33. You'll see a lot more movement. I don't think you're ever going to see rates under 6% in the next couple of years, unless something crazy happens. So those are things that you have to look at. I think insurance costs is a laggard, meaning we haven't felt it yet. But I think you'll feel it in our market by June as some of the new legislation comes online. And that's it. Holy cow, we did a lot. And yeah, we did 199 slides in an hour and 6 minutes. Okay. So let me open it up to questions. Okay. So ADU questions. Yeah. So I didn't get into the ADU effect. South Jersey's better, somebody said. South Jersey is actually.
South.
South is better. West Windsor South is better. All right. You know what? That's not a debate I'm having. Good luck, because there's somebody here, I think, that whose kids are in North. So let's open up for questions here or on Zoom. Zoom, you can take yourself off mute or put it in chat. Here, obviously, just call it out and I'll repeat it for the Zoom people and we'll go from there. Question.
Yeah, you mentioned that people don't want to build condos because of some legal problem.
Okay, so you're a builder. So the question was, why don't people want to build condos, right? So let's pretend everybody on this call is a builder and you build 20 condos. The HOA of the condo association has 10 years to sue you. And usually litigation starts in the 8th to 9th year on condos. So people can't pull their profit out of condos for 10 years. Yeah, a lot of lawyers in New Jersey. So if anyone's a lawyer, not meant to offend, but it is what it is. So the reason is because a builder wants to sell a house, 123 Main Street, pull their profit out and move on and redevelop. The reason condos have dwindled in popularity in states such as ours is the litigation factor in that 0 to 10 years. Now, if the builder did something egregious, they should be sued. But the problem is perhaps it's not balanced overall. So there's an issue with condos, which is why people are building massive rental communities in the area. And plus the depreciation and all the other stuff.
West Windsor is concerned about the train station, all that supply. How do you see that impacting pricing? And then also, that growth with such a great school system, and also, Princeton, and also seeing a lot of inflows. How do you see this? Second question, how do you see the school systems being impacted?
Okay, so there's two. For the people on Zoom, there was two questions. I'll answer the first one first. The question is, or the statement was, West Windsor's building a town center. What impact will that have on pricing? I think very minimal. I think it'll be absorbed very quickly. And again, the reason being, I can walk from that townhouse or condo in West Windsor to the train and be in Penn Station in less than an hour, right? For a price, again, if I was in Morristown, anywhere in Bergen County on the train line, it's double. So how do I see it? I see it get absorbed pretty quickly. I don't see it having an impact on pricing. Schools is a whole different thing, right? So Princeton has its school referendum on Monday or Tuesday for the new budget. Take sides on that. I'm of the opinion, I don't think kids are toxic. I think parents with kids spend a lot more money in towns than people on a fixed income. So, how do the schools will handle it. They'll build more property. They'll resize, they'll upsize. They always handle it. I think a lot of the mental energy that we put into schools, they'll handle it, And for the most part, interestingly, in our market segment, the schools have dramatically improved. And part of that's pricing pressure where, people are moving into the peripheral markets because Princeton, or West Windsor or Plainsboro just became so insanely unaffordable. So a couple questions in chat. South is better. Okay, that's pretty funny. Do I see demand softening for area in 2025? No. As a matter of fact, as inventory comes on, it will get absorbed. Period. Because we're 4 years behind schedule for people buying. People have just been waiting to buy. And look at it like this. To give you an example, Princeton has Avalon on Witherspoon, Avalon on Thanet, Avalon at the shopping center, plus the Alice at the shopping center. For or against it, I don't care. What that does, it brings people to Princeton who didn't live here, right? And they all want to do one thing once they get here. That's what it is. Buy a house, right? So, rentals, I'd rather see more condos built because I think it's a way for people to gain equity, but I don't see demand softening. As a matter of fact, there's massive latent demand. I just see supply increasing incrementally to help offset it. What's your opinion on the new construction homes over normal homes? And also, why are new construction homes all HOAs instead of single families? Okay. On the new construction, I guess my opinion is they're new. New construction is new and you have a warranty. The problem is you will pay. New construction sets the market for pricing. So you will pay the highest price per square foot for a new construction home versus a resale home. Why? You have a HAL warranty with the builder. I guess the HOA can sue the builder for 10 years. So you have recourse when things go wrong. So new construction sets the price for the market just because everything in the house is new. Why are all new construction homes all HOAs instead of single family? Density. So meaning if I can build 30 homes in a neighborhood, right? Instead of 15, I'm going to build 30. But usually what happens is the town will say, fine, you can do that. But the HOA is responsible for the exterior, maintaining it because the town wants to make sure there's a minimum standard for the new community to be maintained. So HOAs are popular when you have more dense communities than super residential on 2-acre lots. So it's just a density issue. And the town says, yeah, you can build it, but this is the minimum standard. And usually that's the HOA that does the exterior stuff like that. Any other questions locally? Go ahead.
Yeah. Does town, you said the town likes to have an HOA in that 30-unit new building. Does town have much legal ability to enforce that?
Does the town have legal ability to force an HOA? No. But if they want it and the builder wants it, they meet in the middle and they compromise. That's how those things are done. So not necessarily legal.
Because it seems not advantageous to the builder to have it.
Is it advantageous to the builder? In my opinion, no. But, it's one of the reasons condos are tough to build because they can't take the profit out. The profit just sort of sits there in case they get sued, which is a horrible thing. But
someone looking to come to the area for a condo, do you advise that they look across the landscape of what you presented to them? Or are there some places where you're like, should they not look in certain towns and always just keep it more wide open? Or is there a good place? Like where would your recommendation?
The question is like, if someone's moving to the Central West, right? I'm marketing, let's just say that's Hillsborough, Franklin, South Brunswick, Cranberry at the southward end, and then obviously the Delaware River on the west side. Where should they look? Depends on the price point, right?
Wanting to have a reasonable price, sort of someone in a downsizing reason, not looking to spend $1 million.
So reasonable price, like townhouses that are in condos that are theoretically reasonable. Princeton's not reasonable. There's nothing reasonable about Princeton. So I would say anywhere but Princeton start. You can go to Trenton and get an awesome brand new condo. But, Trenton has, perceived issues. So it's subjective, on price and everything else. So, but Trenton is a popular price point right now because it's the most affordable segment in the county. So it all depends.
Brokers get notice when a builder is like planning to come? Like, do you know that kind of, you could say, oh, there's going to be a new community in 6 months.
So the question is, do we get inside track info as brokers of a builder? No, just go to the planning board meetings, which are literally torturous. But that being said, I can tell you my business partner and friend, 𝐂𝐎𝐍𝐄𝐂𝐓, sits through every one of them. God bless her. Because I'd rather stick a needle in my eye. I can't do it. My ADHD just rips my head apart. Yeah, it's amazing. Yeah, I can't do it. But there's somebody else on this call I know, like they also sit through the planning board meeting. So you got to watch and see what applications are being submitted. And again, like from application to delivery is years, right? It's years, literally years, depending on the market. So, question?
Princeton market.
Princeton market.
Where's the high stop?
Appreciation?
No, where does the high and resale value stop?
What do you mean? So the question is, where's the high end resale value?
Property for sale, 5.6 million. So
5.6 million?
where does it stop? If there's a buyer, there's a certain place kind of just stops.
I can tell you last year in Princeton, there's a new construction community that came online in Littlebrook. It's called Prentice Lane. And the lot's for $1 million. Just to buy the lot, $1 million to $1.2 million for the lot. And I'd say another $3 million for the house, right? About $3 million for the house.
For the low end. I couldn't find there.
Right. And I literally said, no way. Like, because, I have muscle memory from what it was. So I'm thinking, no, those aren't going to sell. God, sold in a minute. So would a $5.6 million house sell? Maybe. It would be super high end for Princeton. But last year, for the first time in its history, Princeton had, I think, 11 or 12 houses above 3 million sell. And you saw the numbers move. So where does it end? The market will let us know. It's a hard one to call. Would I invest in a $5.6 million house as a spot lot? No. I like to buy cheap crap close to town. Why? Because it's a safe bet. But that's everyone's, but I'm not going to make $2 million in profit, if that's a spec house. So, and literally when I say I buy cheap crap, I buy crap and I fix it up. So, but there's room there for appreciation more than being on the ridge in a $5.6 million house. I think there will be a return to normalcy in the market in the next 3 to 5 years where location will matter. We're just not there yet. We're just not there yet. Any other questions? Let me look on Zoom. Hang on. My eyes are pretty raw. I've been here since 5 o'clock in the morning. Okay.
I have one.
Go ahead. Yeah.
Montgomery Township, they're building a new town center. I guess that's going to bring in more people. Correct? And a lot more people, kids in the school system. I would think the property taxes have to go up.
Look, so the question is in Montgomery Township, and you could say for West Windsor too, right, Steve? You could say for Plainsboro, Montgomery, Washington Town Center, and Robbinsville. It's going to bring a lot more people. The school's going to be impacted. I assume the taxes are going to go up. Please tell me in our lives when they went down. Okay. The end. Well, they have to do a referendum. And then, that's where voting comes in. So Princeton has a referendum, I think on Monday or Tuesday. It's an $70 million referendum. We'll see which way it falls. I don't know. I wouldn't want to take bets on it. So will it impact? It could. But again, kids are not toxic. I understand, if you're on a fixed income and your taxes go up $500, but your equity position just probably went up 100,000. Does that make sense? So people in Princeton, we like to grouse about the university not paying taxes. Well, the university is the biggest employer in Mercer County. So if the university picked up and moved, which I don't see how it feasibly could, everybody's house value in Princeton would fall 95% overnight. So, you're buying into a market. So kids are not toxic. I understand on fixed income taxes going up are not ideal, but your equity position probably goes up accordingly. So there's pros and cons to everything, you know. So, any questions? Anybody want to be able? Go ahead. Yeah.
What is your recommendation on the quick tracking of the units coming in for?
So the question is, what's my recommendation for keeping track of new houses? So obviously, with your associate that you're working with here, make sure you're on a feed from that associate, and again, depending what town, you know, whatever. And then in terms of like supply, you have to go to the planning board meetings, or I don't even know where there's a news service called Tap Into. Have you guys seen that? Tap Into, right? Tap into Princeton, tap into Hillsborough, tap into Montgomery. It's like a franchise newspaper, but it's digital. They don't actually print anything. They're pretty local. They probably post like the town topics, you know, or the Princeton packet, which is gone, might have posted the planning board minutes. I think those newspaper franchisees are pretty local. They may post it. So we just got to pay attention. Yeah. Got to read the newspaper or the digital print. Yeah. Any other questions, comments, concerns? Yeah. So we did record this. So if you want to watch it again, I recommend pouring yourself a stiff drink before you do it. There, yeah. In the chat, tapinto.net /towns. And we'll send you the recording. If there's a specific slide deck for your town, your associate will send it to you. Just text them and tell them, you know, I want Montgomery, I want Hillsborough, whatever. They'll send you the slide deck. And like I said, we do update those decks quarterly. So at the end of the first quarter, we'll have the deck, we'll have the updated pricing, all the closed homes, et cetera, et cetera. So you can come back to that seminar. You can just ask your associate to send it to you. Like I said, I think being educated on the market is the key to succeeding in the market, buying or selling or investing. So, and then we'll keep track of things, you know, just we'll post things as we go. And if you have any questions, just reach out to your associate and we'll get an answer. But thank you guys for coming on Zoom and in person on Saturday.